5 stocks I'm buying now, March 2024 edition. Welcome in, folks, to my favorite video I do for you guys each and every month, where we're going to cover the stocks that I'm buying in the current month and why I'm buying these stocks. We're also going to cover the prices that I'm looking to acquire these stocks at versus, let's call it, stop buying these stocks as well. All I ask in return is that you smash that like button here today and you make sure you're subscribed here to the channel. That's all I ask in return for this video here today, folks. If you want to enjoy a free workshop after this video is over, pin comment down there. That's going to go into how much money you need to retire, quit your job, those sorts of subjects. That's absolutely free. That's pinned comment down there. And without further ado, folks, let's just get into this. We got to get into all 5 of these stocks in this video here today. Let me know in the comment section if you own any of these stocks or you're interested in any of them. I'd love to hear from you guys. Okay. First stock of the 5 stocks up here is SoFi Technologies. This is a stock that today is trading at $7 and some change. Let's call it the low 7s. Now, SoFi Technologies, this is a position I'm looking to start actually in my public account here. And I want to actually start to likely acquire some SoFi shares pretty aggressively now at this point in time. And the reason being is I've seen a lot of very fundamental changes in the business model that are, let's just call it, adding up for a potential huge increase in the stock price here. So if we look at the company's net interest income, arguably the most important metric people will look at when it comes to judging a bank-related company, right? So net interest income from December 2020 through December 2023 went from about $177 million to over $1.2 billion in this latest year. It has climbed substantially. So this is a very strong growth company. Now, simultaneously, operating income went from $432 million in the negative. Okay, that's an operating loss of $432 million in the December 2021 ended year there. This most recent year, they only took an operating loss of $53 million. But here's something much bigger. Very recently, as in this past quarter, the company just flipped to actual operating income. Now the company just had a positive operating income of $51 million. Now, the reason that is so massive is for SoFi's basically entire existence, this company's always been a company that was just had big operating losses quarter in and quarter out. And so people kind of chalked SoFi stock up as it's just, yeah, it's a fast growth company. Okay, they're acquiring a bunch of members, they're acquiring a bunch of customers, they're growing their revenues. Okay. They're just a big money losing company. Well, that has all changed now at this point in time. In the previous quarter, you got a little hint. You got a little sniff that, oh, maybe this company's going to flip over to actual positive operating income. And sure enough, they did it the last quarter, $51 million. I mean, look at some of the losses they were taking. Operating losses, $144 million in that quarter there, $107 million in that quarter there. So this is a huge step in the right direction. And from where management team has kind of been guiding this company now, it looks like the company's going to stay operating income positive moving forward, which is a huge deal for this company. Okay, now, not only are they operating income-wise positive, but also net income positive as well. Now at this point in time. So no longer can SoFi stock be chalked up as a huge money-losing company. Oh, they just burn money. They burn money. That is no longer factual in regards to SoFi. This is now starting to become a money-making company, which, let's be honest, no one really wants to own a bank that loses money, right? Everybody wants to own a bank that actually makes money. I mean, you're in the banking business. You should be making some dang money, right? Now, in regards to this company, there's a big debate about, is the stock cheap or is it expensive? And the reason being is if you look at the forward P, based upon 2025 estimates, the company's trading at about 39 times that year's expected numbers. Now, if you look at traditional banks, they're usually trading at, let's call it 7 to about 12 times forward Ps if you look at a year or two out. So SoFi is trading massively over that, right? But look at this. Total interest and dividend income went from $355 million in the 2021 year to this past year over $2 billion, right? That's over 5x. And then net interest income 5x'd about as well, right? $252 million to $1.2 billion plus. It's about another 5x. And that's just in a couple years. So the company, no one's growing like that in the banking system. If you compare them to a Wells Fargo or Bank of America or JP Morgan or any of those guys, Morgan Stanley, Goldman Sachs, whoever you want to compare them with, I mean, you can't even, it's not even in the same stratosphere as far as growth goes. So you can't even begin to value this company anywhere remotely close to where you would value a Wells Fargo or a Bank of America or a JP Morgan Chase or any of those other guys, okay? The growth is unreal in regards to SoFi. So when I look at the company overall, I see a company that's actually likely trading pretty cheap, considering the growth rates, even if I don't think they're going to continue to grow 5x, these sorts of growth rates. But what do I think is a realistic growth rate for the company moving forward? I believe a realistic growth rate for the company moving forward is anywhere between 15 and 25% a year. And I think they'll be able to do that year in, year out for pretty much the next decade. Maybe they'll have one freak year where they don't do it, but I think 15 to 25% a year for the next 10 years is realistic. And, you just look at them versus other traditional banks, and they're just not even in the same stratosphere, right? So if you're going to have a massive growth company, then you're going to have to pay up. And so that's the way it works in regards to a company like SoFi. The other thing that needs to be considered is it's very possible 15 analysts have those numbers for 2025, 23 cents, right? Could be low. Those numbers could be low, right? If we look at this latest quarter, SoFi came in, they beat by $22 million in terms of revenue. They also beat EPS by 2 cents, which is actually a substantial beat on a percentage basis, right? That's massive. So imagine SoFi continues to knock out of the ballpark, come in and beat numbers. There's a very high potential that maybe this number is way, way too low, and maybe next year's number is way too low as well, and they'll do far better than that. Now, when you buy a bank, you've got to put a lot of trust in the CEO. Now, when you buy any stock in general, you're putting a lot of trust in the CEO. CEOs can completely ruin a company. They can completely change the trajectory of a company forever, and that company can become, a 10x, 100x, 1000x opportunity, right? Anthony Noto, I've got to say, he's really grown on me as a CEO. I listen to this man in many interviews now at this point in time, on conference calls. I'm very impressed with Anthony Noto. And also, if you look at his pedigree, I mean, my gosh, he was a managing director at Goldman Sachs. He was a CFO with the NFL. He's also COO of Twitter. The man's got a very impressive background behind him. And so I think this is a type of conservative man I'm looking for in terms of who I want guiding a bank overall, right? Now, there's only 2 other banks I've ever owned since I've been in the public markets. One of them is JP Morgan Chase, and one of the reasons I invested in that bank wasn't just the valuation, it was also Jamie Dimon. And I looked at him and I said, man, this guy's, he can get this company through any storm. Recessions, inflation, deflation, doesn't matter what's going on in the world. He's going to get that bank through into the other side, and they're going to emerge stronger than when they went in, and they're going to likely take advantage of market share opportunities out there. And that's what JP Morgan Chase does time in, time out. And the only other bank I've ever owned is Goldman Sachs, which is an investment bank, right? And when it comes to Goldman Sachs, I owned that back in the days of Lloyd Blankfein, and he was just, a phenomenal CEO there at Goldman Sachs. So you've got to put trust in the CEO, and I feel very, very comfortable with Anthony Noto. Now, the stock price has crashed massively, and the reason the stock price has crashed massively is, and let me share my opinions on this, but it's a big deal. Basically, the company is planning to sell up to $862 million in convertible bonds. The online financial services company will offer $750 million in convertible senior notes due March 2029, and buyers will have the option to purchase $112 million more. SoFi said it will use part of the proceeds to pay for capped call options to limit the dilution to shareholders of the convertible bond offering. Now, obviously, investors aren't happy about this in the short term, right? But I go back to a decision like this and I say, I put this in this man's hands. I believe he knows much more than me in regards to why this is a smart decision. And so whenever you own a bank, you've got to trust the big dog in charge. If you can't trust them, then you can't own it. At the end of the day, I believe Anthony Noto is looking at this and he thinks this is absolute No-brainer, smartest decision the company can make for the long term of the company. And I'm right there with it. And so I looked at something like this today and I say, okay, everybody can sell the stock off and freak out over this. I think Anthony Noto's making the right decision here. And that's regardless of what my personal opinion is on it. I just got to feel comfortable in that. And if you can't feel comfortable in the CEO in a bank, you can't be in that, bottom line, okay? Now, when it comes to SoFi, it's a little baby market cap on this company, about a $7 billion market capitalization, right? In the way I look at SoFi, I think this company can become a giant over the next decade, a banking giant, okay? And what are we talking about when we're talking about banking giants? Well, this is the list I think SoFi is going to be on if we look out 10 years from now. And I'll show you the justification why I think they're going to get onto this list 10 years from now, okay? You look at the biggest banks, market caps, JP Morgan Chase, 500 billion plus, Bank of America, 278 billion, Wells Fargo, 202 billion, HSBC, 148 billion, Morgan Stanley, 145 billion. When I think about those sorts of companies, right, I think about companies that were able to attract massive amounts of customers across many different price points and offer tons of products to those folks over many, many decades, right? And what I see in SoFi is everything that should line them up to become a absolute giant over the next decade, where they're on a list like this, and they're the type of company that's a $50 billion, $100 billion, $150 billion type company over time. When I look at this company, here's why. Members, which is just a fancy way of saying customers, right? Look at their customer count. If we want to go back to Q4 2021, they were at about 3.4 million members. Now they're up to over 7.5 million members. Look at this. Quarter in and quarter out, they grab more members, right? Incredible. Products also up substantially. So when I look at this company, I'm like, okay, they're going to go to 10 million plus, then they're going to go 20 million, 30 million, 40 million, 50 million, and continue to attract especially a lot of the younger generation that they might be in their lower income earner days, but they're going to climb as years tick along and go along, right? And then, this is worth noting, because not a lot of people talk about this, Galileo. So Galileo, if you want to talk about their tech side of the company, right, and outside of just traditional banking, Galileo has shown a lot of promise. They're up to 145 million Galileo accounts now at this point in time. So that business obviously continues to grow quite substantially. So when I look at SoFi over here, kind of what am I thinking about for buy price and those sorts of things? Basically, my view is scooping up anything under $10. I'm going to try to get my hands on as much as I can here in the short term, under $10. The one thing that worries me is going through a big sort of financial crisis type situation with a stock like SoFi, because they haven't been through that yet, right? This would be their first rodeo. But listening to Anthony Noto talk, he sounds extremely conservative. Also, him having his experience at Goldman Sachs gets through everything. Goldman Sachs, there's a reason Goldman Sachs has been around since like a long, long dang time. And meanwhile, everybody else on Wall Street goes out of business, and Goldman Sachs somehow makes it through every single time, right? They got a different DNA over there. The way they risk adjust is unparalleled, right? He has that Goldman Sachs pedigree. He has chief financial officer pedigree as well. And so I believe he's one that can get through whatever potential storms are in the future. And he's already shown he got the company through Rona. He also got the company through the whole student loan forgiveness situation that the company had to go through for several years. He's had to get the company through a lot, and yet the company gets bigger, and bigger, and bigger, now getting to profitability. So I like what I see here with SoFi. And so, yeah, you're going to likely see me start to buy it actually in the public account, that's the holy grail, man. When you get in there, it's a big deal. It's a big flip and flapjacking deal. So SoFi, I like it. I like it a lot, okay? All right, guys, let's get into the next one, which is Nike. Just do it. Nike, easy money. Oh, is Nike going to be easy money over this next 5 years? So Nike, excuse me, Nike. Nike's a stock that, it can't get out of its own way for the past year. And to be honest, the past 5 years is really pathetic for the stock overall. Nike stock is up a whole whopping 13% in the past 5 years. Now, I look back at past time periods, the only 5-year run I could really find in Nike's history that was bad like this was 2007 through 2011. It had a really rough run during that particular time. And sure enough, it's having one of those sorts of runs right now. It's been really tough for the company. But you've got to diverge in the stock market between what's going on short term versus long term, especially for somebody like myself. It's a long-term investor. I plan to buy stocks over months or potentially years, right? And I hold those stocks, many of those stocks, for many times, months, or usually years and years and years and years, right? There's stocks I hold in the public account that I've held since 2018, 2019, years and years and years, right? And so I'm always thinking in the long term. And I love what I see here for the long term for Nike. Nike's got one of the strongest brands in the world, right? The only clothing company that has that sort of strong brand. The closest thing would be Louis Vuitton, but Louis Vuitton I put more into the accessories category than a clothing company, right? And I mean, you look at the list they're on, you know, anytime you're up there and your brand's almost as powerful as a Coca-Cola and a Google and an Amazon and Apple and these sorts of companies, that's on a whole other level, right? So with Nike, the brand's so successful and the brand's so great, the world is their potential customer. And because they have price points that are realistic for much of the world, it's one of the very few companies that can sell to the world. There's not that many. When you really think about how few companies can sell to the world, McDonald's can sell to the world, right? It's that famous of a brand. Their products are cheap enough they can do it. YouTube, Instagram, Facebook, WhatsApp, products like that. Even those ones actually can't sell to the world because China limits actually their business where Nike can actually operate in China, right? Because of, I don't want to get into that whole situation, but you know, it's amazing how few companies can really realistically sell to the whole world. Nike's one of the few that can do it, right? No, they recently announced they're going to cost cut in a huge way. They're going to do about a $2 billion cost cutting plan, right? And a lot of that's going to end up straight back down to the bottom line of this company. And it's something they do have to do. Now, when I look at analyst expectations, analysts for next year are at about, and keep in mind, Nike's fiscal year ends at a weird time. It ends in May. Basically, analysts have them doing $4.22. I have them doing $4.50 to $5 in the May 2025 ended fiscal year there. So 23 forward P is fair, even if analysts are right there, but I think analysts are too low. So I think I'm getting this stock for a far lower valuation than where analysts have it at. No, if I think about competition, right, because competition always is something that comes up whenever you got to look into any company, right? If I think about the competition, here's what we're looking at, okay? If you want to put them against, you know, another shoe company like an Allbirds, okay? Allbirds, the latest quarter, their revenue is down, 21+%, net loss of $31 million. Who knows if that company's even going to be around in a few years or if they'll be BK, right? There's this company named Noble. I never heard of this company, but I was under the weather this weekend, so I was watching a bunch of the NFL Combine, right? NFL Combine's like this workout, all the future NFL players all go through, and there's this brand I see, it's sponsored all over. They must have paid a fortune to sponsor the Combine called Noble, and the whole time I didn't even know what the brand was. I'm like, yeah, Noble, okay, cool. Like, well, I don't know what it is. And I had to ask my wife, I said, you know this Noble brand? And she's like, oh, yeah, I know that brand because some people wear it at the gym I go to. And I was like, oh, okay. So it's like, and she's like, oh, yeah, they make some shoes and stuff. Like, that to me told me that company has no clue what they're doing. The fact that I watched that Combine over several days and they never ran enough advertisements to even like, oh, that's what that company is. It's a shoe company. Okay, they're for workouts and things like that. I'm just like, they're clueless over there. Adidas, right? They just had their big breakup this past year with the whole Yeezy situation. So I don't know how that's going to turn out. So Adidas is a mess as far as that goes. Under Armour, they're a mess. That stock, if you go back 10 years ago, that stock was $27, $28 stock. It's $8 here today, right? So Under Armour is just a complete mess. So competition is a joke. It's always been a joke. They have competition that props up, and all of a sudden it looks like woo, and then they always screw it up. That's just I've watched this game play out for 30 plus years now. All their competitors always screw it up somehow. They really do. They'll get hot for a bit, and then they just can't sustain it. Nike's the only one that sustains it throughout time, right? No, it might seem like, man, Nike just buys the biggest athletes because it just seems like all the biggest name, most famous, most successful athletes are all Nike athletes, right? And some of that is true, but the one thing I will say is the company doesn't just spend to spend, right? They'll cut losses when they got to cut losses. For instance, they ended the Tiger Woods partnership recently, right? I mean, Tiger Woods is just not what Tiger Woods once was 10 years ago, 20 years ago, 30 years ago, right? I mean, it's just, it's a whole different game. So, that relationship ended, right? Steph Curry, they didn't sign Curry, right? But at the end of the day, and you might say that was a loss, I think it was more of a loss for Curry. And I think a lot of people have probably watched this deal. Curry would have been so much better off if he just signed with Nike. So much better off. He would have probably made way more money. And his Under Armour deal, he got a bunch of the stock. Well, no one even wants Under Armour stock. They're selling. You can't even. You have trouble selling it for $9. So even if he wants to dump his Under Armour stock, good luck doing that. And meanwhile, Nike finessed the whole deal because meanwhile, when Curry goes out there to shoot his shots, there's Nike emblems all over him, right? So Nike really got the last laugh. I look at a guy like Bolt. Bolt really messed up by not signing with Nike. So I think people see not signing with Nike and they realize, oh, damn, we should just sign with Nike. We get way better marketing. So the way I look at Nike, it's got this massive moat around it. Competitors come and go in this game all the time, and shoe companies come and go all the time. And at the end of the day, Nike's the only one who sustains generation in and generation out and grows stronger time in and time out. And on the up cycles, Nike benefits the most. And on the down cycles, Nike does the best as well. You see these other companies have revenues down 20, 30, 40%, and meanwhile, Nike might be flat or revenues down very slightly. So, Nike, love it as a long-term investor. I need to be buying that one. Number 3 of 5. Oh boy, here we go. Tesla, my Esla. Oh yeah, baby. So Tesla, as of today, is trading about $180 a share. Stock's down about 9% in the past year. If you're new to my channel, I've been a Tesla shareholder for a long time. Okay, before everybody jumped on this bandwagon, I've been on I've been in this car for a while. And it's a roller coaster ride of a stock. It really is. The highs are really high in regards to Tesla. And it just seems like there's no top. And the lows are really low. And just to be quite frank, over the last year or so, we've been going through a lot of lows in regards to Tesla for really a year and a half, 2 years now at this point in time. It's been, it just seems like, there's just always bad news, always bad news. Once you get good news, it's too bad news to, kind of override it. At the end of the deal, keep it simple, okay? They got the strongest product lineup in the game. From the luxury side to the mid-size side with the 3 and the Y, they've got the Semi in the market now, and then Cybertruck starting to ramp with Robotaxi coming, right? They got the strongest product lineup out there. They also have the coolest, maybe the coolest brand of any brand in the world. I mean, who else is doing this? You see these celebrities? I mean, I'm not just talking about celebrities. I'm talking mega celebrities, like the biggest celebrities are like driving the Cybertruck around, right? This is great. They said, Elon Musk, you responded, somebody said, well, they clearly have great taste. Important to note that no one receives a discount, including me, and no one is paid to promote our products. This is these mega celebrities going out of their way. The Lady Gagas and the Jay Lenos and Serena Williams and Kim Kardashian and Pharrell and Justin Bieber and all these people, right, are going out of their way to drive the Cybertruck because it is that cool. And at the end of the day, they know if they take that out, that's the coolest vehicle. Doesn't matter what Lamborghini you got. Doesn't matter what your Rolls Royce is or your Bentley is. At the end of the day, the coolest person is the person who pulls up in the Cybertruck. It will be the one that gets all the attention. You got an Aventador, it's just another Aventador. You got a big boy Rolls calling in, it's just another one. You got a Cybertruck, oh my gosh. Bring out the cameras. That's the bottom line in regards to that, right? Now, short term, we've got things working against us. Interest rates are high. Chinese economy is bad. Margins are low, which, by the way, Tesla's margins, even recently, are actually really good compared to most auto companies. Just for Tesla standards, they're low. So the thing is, you got to ask yourself, are these the things that is the Chinese economy always going to be bad? I don't think so. Are interest rates always going to be high? I don't think so. Are Tesla's margins always going to be low? I don't think so. Those are all fixable things over the long term. Meanwhile, look what we have going for the long term. EV adoption is going to continue. The internal combustion engine is on its way out. There's no debating that. It's on its way out. It doesn't happen all in a day, but over the coming years, going to be less and less and less of those on the road and more EVs. And every time you're going to look at the data, it's going to say more EVs, less internal combustion engines. Self-driving vehicle adoption is going to continue. Autonomous taxi networks are coming. It's not like that we're just going to go past that and like, oh no, that's never going to happen. No, that's coming. Just wait on it. Battery cost continues to drop. The company is still scaling several factories. I mean, you would have thought 5 years ago they had already scaled up Fremont to max potential, and yet somehow year in and year out they blow the numbers out of the water. So they're still scaling in China. They're still scaling in Europe. They're still scaling in Austin, right? And then when Mexico comes online, they're going to be scaling Mexico. Company is still young in the margin story. That's the other thing people got to understand. Like, Tesla is so young as a company. I mean, this company wasn't even at scale 5 years ago. Like, they really just got to scale in like the last 3 years specific, right? And so, this is very young in the margin story. They got a lot of 5, 10, 15, 20 years of margin to capture here, okay? This is, everybody gets so caught up in the year-by-year changes. It's like I'm worried about where Tesla's margins are 10 years from now. Services is going to grow into a giant over this next decade. I mean, when you think about the service opportunity from the supercharger network to, maintenance of vehicles or maintenance of a fleet or, things that break on vehicles and in-app purchases, satellite maps, self-driving capabilities. I mean, my gosh, the services opportunity is unparalleled. And that's going to grow into a giant, and it will start to be respected as a giant, but it's going to take a while to get there. No different than Apple services was not respected for a long time. And Apple services really started getting respect about, 4 or 5 years ago. And so Tesla services, probably 4 or 5 years from now, everybody's going to look at that and be like, whoa, this business is huge. I keep watching that number grow and grow and grow, and I'm like, how's no one paying attention to this? This is like the story for me. Tesla will continue to out-innovate their competition by a mile, if you want to even call them their competition. But not only will Tesla continue to out-innovate their competition, they're going to continue to out-innovate almost anybody that you even want to put in the same sentence as them. They've got one of the top CEOs in history at the company. I mean, who's done more than him out there? That's amazing, right? Elon Musk. And they got one of the most talented, motivated workforces in the history of mankind. And so these are all things that are long-term, all going in the right direction for Tesla. So when I look at this story, I say, yeah, the short term, that sucks, man. Those things really hurt. But when I think about the next 10, 20 years, I'm like, those things look pretty flippin' flapjack and good there. Now, I like Tesla stock under $200. I love the stock under $150. If it can go under $150, ooh, man, then we're really, really talking in regards to this one. So I'm kind of hoping for more short-term weakness, but I'm not that confident. I'm not that confident because I do think the management team could signal a bottom in margins within the next few months. And if they do that, then the stock could actually start to move up quite rapidly, because then everybody would be like, oh, margin bottoms in, and things would start to roll from there. So Tesla, I like Tesla. Fourth of these 5 stocks buying March 2024. Look at this, Whirlpool. Yes, I want to start a position here in Whirlpool. Stock's done horrible over the past 5 years and really over the past few years here, right? And you might say, what the heck are you doing messing around with a washer and dryer company? Are you kidding me? Are you talking stoves? Are we talking dishwashers? Are we talking refrigerators and freezers and microwaves and hand mixers? What in the world's going on? I like money, okay? I see money. I see arbitrage here. And if there's money, I want to go toward it. So Whirlpool just got kicked out of the S&P 500. So I think the stock, there's a decent probability it could go under 100. Here in the short term, it got replaced with Supermicro. Yeah, I'm not surprised. And so that's a huge short-term kind of bad thing for Whirlpool's stock price, which I'm looking at it as somebody that wants to start a position. I'm like, this is perfect, absolutely perfect. Here's the deal, okay? Existing home sales are pretty much around where they were in the Great Financial Crisis. And, the only time it was worse in the Great Financial Crisis, the housing crash, was in a few little short-term spans there. But actually, for much of the GFC housing bust, it was actually even better than it is right now. I don't think we're going much lower than here for existing home sales. I think this is bottomish territory. Now, I don't want to call a bottom what specific month, but we're in bottomish territory. That's what I'll say about that, which is going to bode very well, because when people buy a new home, there's a decent probability they might buy a new washer, dryer, refrigerator, oven, things like that, and that bodes very well for Whirlpool, right? The stock's trading dirt cheap. I mean, 7 times this year's expected numbers, that's dirt cheap. for this company, and they did beat very nice on EPS and revenue last quarter. So overall, Whirlpool, is it the most exciting company in the world? No. But it's a dirt cheap stock. I see an arbitrage here. I see a potential to make a double up on the stock over the next few years, assuming I'm right and we bottom out existing home sales this year and that starts to move up over the next few years. Then I think Whirlpool can go from kind of like $100 to maybe a $200, maybe have a double up opportunity there while making dividend money. It's not as sleepy as it might seem. Let's just call it that, okay? There's something there. I'll put it like that, okay? Last stock up here of the bunch, number 5 of 5 is Cake. I love Cake. Cheesecake Factory to the house, baby. This one I've been buying very aggressively the past few months. I'm up to 1,323 shares in the public account. It's also one of my biggest positions in the Patreon portfolio. And I've spoken about that one quite extensively last month on the 6 stocks I'm buying now video. So if you want to hear me talk about Cake, check out that video there. You can search it on my channel or just search it on YouTube. Or also, there's this video I put out that looks like 56,000 people have gotten a chance to see from 2 weeks ago. 9 stocks to buy now equal to stealing money. If I recall, Cake was one of the stocks talked about in that video there. So, you can obviously find that on YouTube, no problem. Just type in that or go to my channel, whatever you want to do. That's Cake, okay? It's a piece of cake. Hope you guys enjoyed today's video. I appreciate y'all joining me. If you want my free workshop, how much money you need to retire, quit your job, all that good stuff, pin comment down there. You should be able to learn a lot from that workshop there. I hope you enjoyed today's video. Much love and have a great day.